Hello, hello, hello. Happy day before Thanksgiving. How's everyone doing? Lots of numbers out this morning. Good morning, McRangers. Good morning, Mark. Sterling putting a lot of posts in here. I don't know what order because they're not numbered and they're completely out of order, Sterling. So that's not your fault. It's just what I figured is once the live stream starts or the countdown starts, and people are in, the posts come in order. Anything that's put in before the countdown timer starts, it's all jumbled. That's just an FYI. So if I do things out of order, it's because I don't know what order they're in without trying to go back and monitoring the live stream while the countdown's happening, which is not going to happen. So we'll go through those numbers in a second. Thank you for, as always, for putting them in, Sterling. Good morning, Patrick. Where else do we have? What else do we have? A big reversal in natty gas futures after the key after against resistance. Boy, I can't talk this morning. This is not going to bode well. By the way, I am on Ninja Trader in a couple hours, 11 a.m. Eastern. So if anybody wants to tune into that, welcome to see me on there again. What else? Apple saw minimal smartphone shipment growth in 2024. 2024. Boy, my head's not working either. I need another sip of green tea. So, it's matcha green tea. What else? What else? I'm just trying to see. Well, I'll just go through the numbers myself since everything's jumbled up here. Where do we sit? Good. There's Sterling's good morning. There we go. What else? There's lots of information in here. I saw this from, thank you for putting in the yellow, is from Kobisi. I subscribe to their X feed. So I did see this, but U.S. national debt is set to hit a massive 57 trillion over the next decade, according to the latest CBO forecast. Did see that. It is insane. Here, there you go. If something does not change, that's not good. That's the post. That's the thread that Sterling is talking about right there. Good morning, John. Good morning, Royal Palms. Good morning, Dan. Good morning, Daniel. Good morning, Anissa. Happy pre-Turkey Day. I'm thankful for you and the Path Trading Partners family. Also thankful for your wife for sharing you. She was aggravated I was doing a live stream this morning because I gotta get up. She took the day off. She took yesterday and today off, and she wanted to sleep in, and it just turns into a nightmare with the dogs. So she was aggravated, but I am here. Then it's Ninja Trader. Then I'm winding down. I am winding down. So here's where we got mortgage rate pulling back slightly. We got durable goods. Sterling put all this information in the chat. So thank you for Sterling. Consensus was 0.5, coming in at 0.2. This has roughly gone nowhere for a year and a half. Durable goods orders. It's chopped back and forth. So no growth in durable goods overall. And the X-Transport month over month is expected at 0.2, in at 0.1. So durable goods aren't going strongly. I don't know why this is out of order too. Why is like durable goods? I just want it in order, please. Nothing's in order today. GDP. This is the second estimate. Remember, this is the second sort of revision. They keep going. We get a final number, but they keep revising it forever. Coming in at 2.8 with consensus. So nothing shocking there. Initial jobless claims coming in slightly better, but it's stuck right around this, between this 210 and 220. Nothing shocking there, but continuing jobless claims. Another print, even slightly better than consensus, but another print above 1900, which, you can see here the little graph that pops up. It's continuing to climb. So people that have lost their jobs are not easily finding new jobs. Now, with the core PCE prices, for the second estimate, it was expected 2.2, coming in a little better. For 2.1, that's for the whole, based off the GDP numbers. The more important ones are the numbers coming out at 10 a.m. Eastern. Okay, so in roughly 50 minutes, We have the October PCE numbers in October, core PCE in October, spending and income numbers. That's gonna be, since nothing really shocked the markets this morning, that's gonna be the one to watch for. We have the Chicago PMI expected to still come out a little bounce from prior, but it deep in contraction, and that's coming out 15 minutes after the cash open. Let's see who else is here. Hello, Charles. Good morning, Options 22 from Dubai. Good morning, MJ. Consumer credit card debt has hit 1.7 trillion, which is just nuts. Yeah. Yeah, everybody enjoy your holiday, and if you don't celebrate Thanksgiving because you're in another country, you know what? Enjoy. It'll be a quieter market day. I gotta put something else on here. Good morning, Anissa. Anissa, I'm on Ninja Trader again. I hope to see you there. So with the notes, I see December contracts above the double bottom, but with March is not. Do you think this? Do you think to stick with December? If you're trying to trade it, trade what March does. Remember, I covered the continuous contracts here, but for actual execution, okay, if you're actually executing against a futures contract, do the analysis on that specific contract. And if you're really close to a roll on any contract, use the next one. Because if you're going to hold it for a while, if it's going to pattern to take, that's going to take a while to play out. Here's your Thanksgiving schedule, by the way. I'm sorry it's a little blurry, but I think we can work through it. Today, everything closes at the regular time of the things we follow. Tomorrow, or Wednesday, what day is it? Yeah, Wednesday the close. It reopens today. It reopens for the evening session. I call it the Asian session. Opens at its normal time. Tomorrow, remember, it trades all night. Rest of the world does not celebrate Thanksgiving besides the USA, unless you're an expat maybe, but that doesn't matter for the exchanges. Everybody else is still business as normal. So we have futures trading, equity, energy, everything's trading normally. Now the equity futures halt early. 12 Central Standard, so 1 p.m. Eastern Standard Time. Energy is 2:30 Eastern. FX is 4 still. Interest rates are 1 Eastern. Metals are 2:30 Eastern. It reopens at the normal time, Thanksgiving evening. Okay, so you have a little longer closing period. And then again on Friday, Black Friday here in the USA, which has lost its thing because it's now turned into everything after Thanksgiving is Black Friday. Did you notice that? Like Black Friday sale starts early. It's like November 1st. So it's like pretty much the whole month of November sales for the consumer oriented person. So tomorrow you can see equities close at 1:15 Eastern, 12:15 Central. So you can just look down this table. So it's still an earlier close on Black Friday and to wrap out the week. And then Sunday night, everything's back to normal. I hope that helps. In terms of earnings, we had nothing this morning. And yesterday, we had a lot of beats, but a lot of sell-offs. A lot of sell-offs after the beats. So that's something else. Let's see what else. Into the open this morning, you have NVIDIA dropping with a lot of the other chips. You have mega caps mixed. Tesla still riding higher. You have financial stronger. You have consumer defensive strong. We'll just take a look at the sectors. So technology is really the only thing down bigly this morning, 65 basis points. Everything else, real estate, consumer defenses, consumer cyclical, financials, all up. Sort of a shift into more defensive stocks this morning, at least ahead of the PCE numbers for October. Going into those numbers, we'll just do a little quick refresh on the rate cuts odds because it was climbing yesterday. Now we're about at 66, at least at 66.5, not 66.6%. So 65, we'll just call it 65-35, favoring the odds. I'm going to be paying very close attention to how that shifts after the 10 a.m. numbers. Fear and greed, we're still solid in greed. PE ratios 38-41. All right. All right. Did I miss anybody here? Good morning, Richard. Yeah, tell me you have extra inventory without telling me you have extra inventory. Happy Thanksgiving, Ted. Thank you, Anissa. We'll be tuning into Ninja. This gold volatility is all over. Good morning, by the way. Did I get you, Charles, before? Hello, Charles. Oh, I'd be glad to have. By the way, if something major happens, like between now and Friday morning, I would do. There's going to be no live stream whatsoever tomorrow. Only if something major happens, which I'm not expecting, would I be on Friday. Other than that, don't expect to see me till Monday, please. So I need a little downtime. We do have still the potential double top. We are coming up. We finally broke through that very key resistance shelf yesterday, 60-35 area, and that's turning into some support right now. You see, this was the prior key resistance area. It's actually right here. We just dropped below it slightly, but we're trading right around that equilibrium price after pulling back. All of this is going to go out the window, though, once those 10 a.m. Eastern numbers come out. Okay? We are at cycle tops. You see it here against very key resistance. Now, if it blows through this, it's roughly 60.95 to 6100 is your next target area. If the numbers disappoint, the key area I'm watching is roughly about 6K. That's where the rising rotation zone is. Prior 75% harmonic. If I flip this, not that one. If I flip this, by the way, if you wanted to do something again with TradingView, they have really good Black Friday deals. Amazing Black Friday deals. So if you need to renew your subscription, now's the time to do it. You can see here roughly, here's where the retracement harmonics come in. 59.99 is a 25% harmonic with the rising rotation zone. On a follow through to the downside, your key area is going to be 59.51 over the next few days. If the markets decide, hey, we're rolling over, 59.51 is the next key area, especially on a closing basis. So there, and we're back to overbought territory. So pay attention to that. And weekly cycles have flatlined right in the middle, sort of waiting for this. Remember, your rotations are now coming closer together. That is a warning sign, but we'll have to see. Turducken, no turducken this year. We're in this rental. The oven does not work really well. So, and my deep fryer is in storage. So all I did was order one of the prepared meals from Whole Foods. So I reheat it. I'm just reheating. So Thanksgiving's gonna be really easy this year. Next year, because we're doing a home inspection on a new build next week, which we got actually a really decent rate drop, and with their buy down stuff, we got locked in a rate. So not only did we get a huge discount on their prior pricing, which I know it's still a risk because I think real estate's going to pull back. So I have roughly about 20% at risk just off purchase price. But we need another place to live. I can't keep renting with the 4 dogs, and we locked in a rate under 5%, a mortgage rate under 5%, with their buy down offerings. So it's actually coming in cheaper than the price we're renting. It's in a different part of town, but we will see if that works. But then next year will be, and that's a house I'll probably stay in for about 5 years. So yes, I have some price risk because I think housing is going to pull back and will continue to pull back. But at least I'm not going to have to sink anything additional into the house because it's fully redone. It's like 3,200 square feet. It's always a new build. with, so we'll see if that works. NASDAQ, so it's risky I would not recommend buying right now, but with the dogs we're having, and the place I'm renting now, we had to find something else, and it was getting too tough to find something that would take 4 dogs. NASDAQ, technically barely closed above the 62.5, but that did slightly try to shift the probabilities up. 2101, 21,221 are higher. I'm still having trouble talking today. 20,744 is very key support. Same thing, daily cycles rolling over. Weekly cycles on the NASDAQ still headed down. So we have sort of a mismatch in things. So I'm more focused on the rollover risk on all these markets right now. The Dow just keeps climbing along to the next harmonic cluster area, this 45K cluster harmonic area. So the major, should the numbers disappoint, the major pullback area is the rising 8 EMA, the prior breakout area. You have a gap left behind, so roughly around 44,450 is the major pullback area should we start to roll over. The minor pullback area is 44,820. The Russell just basing near all-time highs. The key area to watch for if the numbers disappoint is the gap fill to 2413, which is roughly in line with the daily rotation zone. The bigger area to watch for if we continue to pull back is 2379. To the upside, if it breaks out, you have 2498.9. The DAX, a whole lot of nothing. Nothing to talk about. If things start rolling over in the DAX, though, it's still the same thing. Watch for a reconnection with the 200 simple area around 18,650. Notes, finally turning more into a pullback correction, coming in with the weekly rotation zone. So this is going to, if the PCE numbers come in sort of benign and the rate cut odds jack up for December, like back up, watch for this to continue to pull back to about 111.14 area. If it disappoints, then we've already retapped the rotation zone, and back on the dailies, I'll be watching roughly to see how it reacts right around 110 to 110.04. On the yield basis, you can see we paused here, 1 day pausing bar, but we're looking to break below. I need to see the follow through going into those 10 a.m. PCE numbers. If again, the rate cut odds jack back up because the PCE comes in line or even better, then I'm watching for the pullback to 4.2 to 4.165 to 4.2, but 4.2 is very key. If it disappoints and we start moving back up, really going to be watching right around 4.35 again. Yeah, see, if you're planning on short-term ownership, no, but you're planning in for the next decade plus ownership, which is fine. And the reason we went with a new build, yes, it's got a smaller lot than we wanted, although it's a decent sized lot. It's in a very different part of town than I'm living now. A very nice part of town. But I don't have to sink anything else into it. Everything's new, everything's warranted. It came with every appliance, nice 3,200 square feet, all with the latest insulation and energy efficiency, tankless water heater, and my net with mortgage and even its gated community. I'm coming out cheaper than I'm renting now. So, and I'm not planning on moving again for the next few years. So that's again. But if you're just looking for a short-term buy, I'd be really patient. Because to me, it's not a good trade. Dollar index. By the way, I'm watching. If we do pop up, going to be watching to see if we form a head and shoulders top. This is also going to move in 35 minutes. If we continue to pull back, remember dollar index is at weekly cycles top after very overbought. The key pullback area to watch for over the next couple weeks is back to this 105 area, 104.80 to 105. That would at least reset it to the rotation zone, okay, on the weekly basis. But if we do bounce, going to be watching then to see if we form a more significant top. Very key resistance is 106.51. This does not mean the dollar runs over because it's got a lot of area to lose. But remember, this was on a tear since end of September. You know, this has been on a massive tear. So would not be surprised to see a dollar continue to pull back in the short term. Crude, we have the ceasefire now, the 60-day ceasefire. If we look at here, crude is just a whole lot of nowhere. The only thing I'm watching now, because it did come up, catching the rotation zone, kept rotating back down. I will be paying attention to that $67 mark. If we lose $67, I'd probably go through more on NinjaTrader with the individual contract. But if we lose 67, I'm watching for the breakdown play in crude. Natty gas, we're getting some serious volatility. On the continuous contract basis still, it's about 3.1 for key support. It's trying to chip away up here. Nothing's broken with the bullish pattern yet. What would really, if you want the medium term thing, if it starts losing this about 296 area, and then we start getting back below the 50% harmonic, I'd be really thinking it's going to go back into consolidation. Other than that, it's just a volatile potential bullish pattern. But how do you view structuring down payments? What do you mean? How do I structure what? I mean, we're putting down again 20, and then I always like to. I put in a down 20 because I like to keep my extra cash for investment stuff, especially with locking below 5 for a 30-year mortgage. And I can, you can outperform 5% by keeping money liquid. And then I just like to make extra payments towards principal. So I'm reducing my interest exposure over time by just paying down extra towards the principal. And I couldn't get, by the way, which shockingly enough, I could get a better rate by a whole percentage point on a 30-year than a 15-year. That's why, if you want to know why I didn't go with a shorter mortgage, because I couldn't get as good a rate. It was going to be 6% on a 15-year versus 4.99 on a 30-year. Gold, we had the contract roll. By the way, that's why the gap up. I'm sitting on my hands right now. Gold, still going to be watching. We should be setting up for a bigger potential pullback. Okay? Still, or a bigger consolidation. That does not mean the bullish trend is over, but we could easily see this longer term pause, maybe even through the end of the year. It's still technically based off the close from the other day. You can see here, let me show you. Sorry to sidetrack into housing stuff, but that's in case you were wondering. If you weren't wondering, it doesn't matter. We're still, this I'm taking with a grain of salt as, okay, we still have probabilities that we could shift up, but I'm watching for more consolidation mode. And then yesterday we came back down. If I flip them around to the 6, we actually came back down to 62.5, but not closing above it. And then we have the gap from the contract roll. If you put it in back adjusted mode, you can see it's still up. Okay. So I'm more watching for a consolidation unless we really start taking out this 2720 area to the upside. What else do we have? We have the yen, which triggered the double yesterday. Hitting the first target, now below the 50. So yen is back in strengthening mode. We triggered the pattern and has already hit the first target. So We can lower the stops. The invalidation point would now be at 154.62. Would not have a stop that far away personally. And the next targets are 150.80 roughly and 149.80. I wonder if you can hear Legend playing in the background. So that's what the growling is. That's how he plays. It'll be interesting now to also see the euro. I'm really curious to see if we make an inverse head and shoulders down here and we get a little longer term bounce, maybe through the end of the year before the next rollover play. Bitcoin, little bounce up. Pay attention to, we're back in the rotation zone, and also pay attention to yesterday's high. Break above that with a follow through close is a %B buy, and it'd be a rotation zone buy. So that's what I'll be watching in Bitcoin. Spiders, oh boy, he is really full of energy this morning. On the pullback level, if things really fall out of bed with the PCE numbers, there's a gap filled to 597.53. To the upside, you're looking at 602.19, and then you have this cluster at 605. The rotation zone is sitting back at 596. So those are the key support and resistance levels that I'll be looking at. The Qs still are sort of a mess, but the key support's coming in at 506 and then roughly 503.60. We'll take a look at the tick in a second. Yeah, that was crazy. 50. I think you're referring to 15 versus 30 year. Decent. They were only willing to buy down the 30 year, which is shocking. But okay, I'll take a still sub 5 mortgage at this point. And I know you shouldn't base off payments. I'm not, but you know what? I have to live somewhere at this point. And it was getting, oh geez, it's getting so hard to rent with 4 dogs, even though there's so many rentals for empty. Let's take a look at that tick. Let's take a look at the tick. Yeah, decent. That is a decent tick opening. Decent tick opening. So what's the thing we watch? Well, I watch for this pullback, and based off the shorter term charts, and then watching this 60-25 area is going to be very, very key support. Very key support. If it can't get there, if we rotate up, I need it to break at this point back above. It was 60.35 before, but I want to see it really follow through about 60.37. Let's take a look at Tesla. Tesla, there's not much to talk about unless Tesla breaks below this 335 area. If it does, I'm then watching for a close below 328.84 and then possibly a retest of the 315.76, which could be a front run to the double top. Okay, because it checked off those 87.5 targets and everything else. So that is done for now. NVIDIA really starting to break down. This is getting interesting. If we lose this 132 area in NVIDIA, it could get real interesting for the markets. So that's where we sit with that. Just to recap some stuff from yesterday. Dell. Remember, see, this is why you wait also for the close above the 62.5. So Dell gapped open on Monday, but did not close above the 62.5, so did not shift the probabilities. So this on a closing basis, remember, close is always more important than the highs and lows. If I put this on a line chart, where's the rollover zone between the 50 and the 62.5? You see here, we never closed above the 62.5. We had multiple closes in that area, and then we rolled over. That's why it's so important to get the close to shift the probabilities above the 62.5. Now returning to the 200 simple. If we start losing that, Dell could get interesting too. Even though it was a beat, slight miss on revenue. Now you also had stuff like, what else? HPQ, which was a beat, but a nice little drop there. I'm expecting a lot of these tech stocks over the next little bit to return to the 200 weekly area for a lot of them. At least on HPQ, the 200 daily area. I'll be watching for rollover setups in that. Autodesk. Look at that. That was another. Some of these stocks got way ahead of themselves too. Another beat. And a gap below key support. So again, I'll be watching for potential rollover plays in this. You had CrowdStrike, which was again a beat. Little better revenue climbs. Revenue still climbing on this, but here, I mean, I'm not paying. Look at the P to E ratio right above my head here. 531. No. And if you look at the revenue, just look at the revenue. So you had prior was 963. This was just over 1. But that's not the kind of revenue growth you want to support a PE of 531. These valuations are insane. Thank you, Jake. Thank you, Mark. So if you have to run, there you go. I think that, what else did I forget? Workday, Autodesk. Workday. By the way, you had to position this as one if you were looking for a downside negative. There was a potential double top, but this essentially had to trigger post after hours with the earnings, and then it gapped down right by the final target. With that, I got to get going, and I will talk to everyone probably not until Monday. So you get to, well, I'll talk to people on NinjaTrader, but then you get to enjoy a nice break for me until Monday unless something major happens in the world. Thank you, Charles. Again, thank you, Jay. Thank you, everyone, for tuning in. Thank you, and everyone who celebrates, have a wonderful Thanksgiving. If not, have a super peaceful, relaxing time until Monday, and I'll talk to you all later. Bye for now.